Bloomberg Tech is live from coast to coast with Caroline Hyde in New York and Ed Ludlow in San Francisco.
This is Bloomberg Tech. Coming up, Apple surprises with a strong outlook, demand roaring, and signs it's coping with a supply crunch. The stock soars back to life.
Plus, Roblox plunges as an aggressive push to enhance safety tempered daily user growth. We'll discuss with the CEO.
And a Bloomberg interview with OpenAI CFO Sarah Friar, who pushes back on the AI leader missing its own target and bigs up its stretch goals.
Let's talk about goals. Let's talk about where the Nasdaq 100 is. At the moment, if you're looking at publicly traded companies, we're up 0.9% on the key tech benchmark. Ed, we are at a record high. And in fact, we've had 5 straight weeks of gains, the same as we're seeing on the S&P, longest winning streak and weekly gains since back in 2024, even as we're still waiting with bated breath between some sort of deal between the US and Iran, a longer-term peace. The market is hopeful for that, but really it's been tech driving it, and you've got the key stock.
Yeah, Apple is the big story, and this is a big move higher. We're off session highs, but we're looking at a 3.5 standard deviations move, on track for the best day at one point in almost a year. This doesn't normally happen. The last time we got an immediate post-earnings move like this from Apple was in May of 2024. The outlook for sales in the June quarter is growth of 14% to 17%, and Apple was super clear. Demand for their products is outpacing their ability to supply. We'll get into the specifics and more on the consumer demand side of the Apple story with Julie Ask. Julie Ask Advisory, a tech futurist who studies consumer behavior and, of course, a long-time follower of Apple and what's going on inside Apple. Let's be very focused on demand. Apple has a wealthy, high-income customer base, and all of the evidence is they're very happy right now to buy iPhone, iPad, and Mac.
Yes.
Give me more.
Yeah, so I think if you look at the U.S. economy, the economy grew by 2%. GDP in the United States grew by 2% in the first quarter. Folks have tax refunds in their pockets. And we all know that we're in I guess we're going to call it, is it a K or V-shaped economy here, where the affluent folks in the United States are still doing well and still spending a lot of money. And that outpaces some of the things on the other side, like low consumer sentiment, high energy prices, and things dragging the economy in the other direction.
It's a formula, right? An equation, demand versus supply. And what Tim Cook's talking about is principally chips being a supply constraint and Mac as a focus that they can't get enough out there into the real world. What was your interpretation of the real story there, of what's really happening, of how Apple's managing in that environment?
Yeah, I think, Tim Cook is a genius when it comes to supply chain. He's also been very good at navigating the political environment. And, I don't think they've gotten lucky here. I think they've planned well. I think the second thing, you look at, too, when we think about all of the AI and all of these use cases, it's driving demand for more powerful machines and more memory. And that certainly fits into Apple's sweet spot.
I'm surprised, Julie, that there isn't more hand-wringing about the forward guidance that these constraints in supply chain are going to remain, that this is going to affect gross margin in the second half of the year when Tim Cook's handed over the reins. Why is there not more worry about that?
I don't have a good answer. To be honest with you, I don't have insights into the supply chain. I mean, certainly Apple is one of the most prominent brands in the world. They probably have more power in purchasing in the supply chain. And they've also done a lot of things over the past couple of years to diversify their supply. So I wouldn't underestimate what they're doing.
What's interesting is they've diversified their supply chain out of China. But finally, China is back ramping in terms of demand. What did you make of the stellar gains that they're making there?
Yeah, honestly, I was impressed. It was, one of the things that impressed me, not just that the iPhone sales grew by 20%, but they seem to have made gains in every market around the world. And they kept emphasizing it wasn't just the developed markets, but it was also the emerging markets. So an impressive quarter for sure.
We wanted to learn a little bit more about Apple's future and the story of Apple's growth trajectory. And we got the smallest of glimmers when John Ternus popped up on the earnings call. And he said, there's a great product roadmap. I'm just not going to tell you anything about it. Simple as that, really. I mean, what is the expectation from experienced industry analysts like you on how John Ternus would be any different on the product side to how Tim Cook has been?
Well, I think there's a few things I keep in mind. I think the first one is there's really no device, like an it device on the horizon that's going to replace the smartphone.
You don't think the foldable phone is an it device?
So maybe, but fundamentally, we are glued to screens. We like cameras, we like social media, we like YouTube, we like watching sports, so a screen is important. I don't believe the next it device, so to speak, is going to be an AI pin that's listening to us and generating context for a number of reasons, like the use cases, the privacy, and so forth. So I think that's a piece of it, and I think the other side of it is too. Certainly, when we talk about AI, will increase demand for more powerful devices with more memory and more speed.
Julie Ask from Julie Ask Advisory. It's great to have you back on the network. Thank you very much for joining us. Now, look, for that AI deployment, you need the hyperscalers to spend. And boy, are they on track to spend at the moment over $700 billion on AI infrastructure. A new macro analysis, though, suggests there's limited evidence that the payoff thus far justifies the extreme cost. Tatiana Darrier is here with us from New York to break it all down. Tatiana, your piece actually caught my attention because I thought it was positive about the fact that people are using AI, deploying AI in their businesses, and actually the labor market is climbing at the same time. Yeah. So maybe we relieve some angst about labor and AI, but the angst about paying for infrastructure and AI. What was the data that showed you that we're really not seeing a payoff these hyperscalers yet?
Yeah, exactly. So the macro angst, perhaps this does not justify that because the workforce is still growing, at least for the 14 large corporations that I looked at, which arguably have the largest budgets to deploy AI. But is the cost of those who are enabling this technology worth it? And if you look at across measures, I mean, everyone has their favorite CFA metric, right? I'm not saying these are the only ones, but I'm a macro tourist. So I look from a bird's eye view, and I looked at things like sales to gross assets. I look at things like return on invested capital. This is a key one because it has turned the corner lower in recent quarters. And it's a new development. It has been going up ever since the launch of ChatGPT, and it's turning lower now. And that explains why investors are getting very jittery here because, yes, it will take time for these investments to pay off. But how much time? That is the key question.
Tatiana, I'm going to help the Bloomberg Tech audience out a bit. The reason we're talking about this now is on Wednesday night, 4 of the biggest tech companies in the world told us this year they're going to spend a lot of money on the infrastructure that powers AI. And everyone wanted to know, well, what's the result of that? What comes out the other side? And so in your analysis, the dynamic is that AI is improving efficiencies, it's not displacing jobs, and it's undermining the cost-cutting case for technology. Tease that out a bit and also explain, why did you dive into this data set?
Yeah, well, the key question is, is really AI revolutionary for companies yet? And it shows that it's boosting productivity, but it's not displacing labor. So that means the benefits are real, but perhaps modest and not as revolutionary as Sam Altman is selling you and telling you that AI will displace all humans. And then that casts a shadow on how much demand will these companies ultimately get down the line, right? If a CEO decides, well, it's great, but perhaps not worth all of this investment because it's only helping me 4%, then perhaps they will slow down the spending, will slow down the demand. But the big tech hyperscalers, they're investing ahead of the demand. And this is something, obviously, we've seen back in the .com when the internet infrastructure is the same key risk. What they have going for now, the hyperscalers have going for them now is the strength of their balance sheets and their profits that is earning them a little bit of the benefit of the doubt. But some of these metrics are already mixed. If you look at return on assets, it's been falling for Meta and Microsoft, but surging for Amazon and Alphabet. So only companies who are really delivering very solid results, like Alphabet, it was just an outstanding report, those will earn the benefit of the doubt more than the others because the evidence is really mixed across the companies.
Bloomberg's Tatiana Darrier with the macro view and the data analysis on what's really happening in tech. Thank you very much. Now, coming up, OpenAI CFO Sarah Friar tells Bloomberg the company sees a, quote, vertical wall of demand for its product. We have more from that conversation next. Caro.
We've got some key CEO conversations to come up, and we've had some big volatility in the stocks that they represent. Roblox up by 15%. This as they move aggressively, they say, to adopt safety precautions. It's all about age verification, but it's perhaps putting some friction into new users. We're down 15%. Twilio ramping up 17%. The age of AI is an inflection point. We have both of the CEOs on later in the show. Stick around for that. Ed, what else?
Okay, let's get to shares of Spirit Airlines, down severely, sharply, around 60%. After a report from the Wall Street Journal saying the company is preparing to cease operations after bailout talks with the US government have failed. That is from a Wall Street Journal report where they cite sources. Remember, last week, over the course of many trading sessions, we saw 150% gains to the upside, bigger gains to the upside because there was an idea the US government would bail out Spirit. Looks like it's not happening. We'll be right back. This is Bloomberg Tech. OpenAI CFO Sarah Friar tells Bloomberg the company is meeting objectives and sees strong demand for its products. Friar pushed back on a Wall Street Journal report earlier this week that the company missed internal goals for revenue and user growth. Let's get the details from Bloomberg's Shireen Ghaffari, who conducted that interview. I want to start with the pushback, right? That the metric that was out there from the Journal is that they are not hitting a billion weekly active users on ChatGPT. And in the course of the conversation you had with Sarah Friar, she's talking about them hitting the highest levels that they have and stretch goals. What did you learn from that?
Yeah, I think she was talking in the perspective of the internal revenue targets, which there were also, in that report that OpenAI did not hit some internal revenue monthly goals early this year and some other revenue targets. And what she said was that, at the highest level, we feel like we're beating our plan, but how we often get there moves around from period to period because it's still a young business that's not perfectly forecastable across every metric. So how I interpreted that and how she explained the stretch goals was an acknowledgement that internally they may have not met certain goals, but that overall she, assured confidence in them meeting their revenue targets at a higher level is sort of the direction of how I interpreted her comments.
And Shireen, that confidence with that quote saying we've got a vertical wall of demand. So is still the argument that actually it's compute that limits the ability for the company to grow at perhaps the pace it even could?
Yeah, that's right. So she talked about the fact that she feels they're still very compute constrained, meaning they want more compute, they're scouring for more compute. Now, we've seen the Stargate plan shift as we reported a pullback in some sites in Norway and UK. I asked her about that, and the response again was that while the details may change in the types of compute deals they do, that overall they want to be able to serve products like Codex or their new image generation model more broadly, and that compute is still a limiter there to getting more revenue, essentially.
It is such a great story. Basically the most read on the terminal throughout the morning, Shireen, and all about how they've got a genuine friendship. Sarah Friar and Sam Altman, we appreciate the reporting. Thank you. Now, Elon Musk told a jury that there was no contract dictating the terms of his early donation to OpenAI. Now, at the trial over the AI company's non-profit status, Musk said he was reassured by his fellow founders that OpenAI would continue to operate as a charity. Now, during his 3 days of testimony, the Tesla boss stressed his concerns about AI safety. OpenAI co-founders Sam Altman, Greg Brockman, well, they're set to take the stand later in the trial. Ed.
Elon Musk's annual compensation from Tesla was $158 billion last year. That information revealed in a regulatory filing from the company late last night, about 6 months after investors signed off on a $1 trillion stock award for the billionaire and compensation plan. The filing also offered new insight into the overlap between his companies, showing that Tesla made more than $500 million in revenue last year from selling products to other Musk-run companies, in particular XAI. Another top story, the Pentagon has struck agreements with NVIDIA, Microsoft, Reflection AI, and AWS for use of advanced AI tools on classified military networks, according to a Defense Department statement and 2 defense officials. This adds on to other tech companies that have agreed to similar deals like SpaceX, OpenAI, and Google. Bloomberg senior tech editor Mike Shepard joins us from Washington, D.C. I just want to go to basics with this. What the deals are for, what the underlying technology we're talking about is.
Well, Ed, this takes these companies, which already have been providing some AI tools to the Pentagon, it gets them into the classified space, along with SpaceX, OpenAI, and of course, the company that didn't get mentioned by the Pentagon, and that is Anthropic. Anthropic was really the first to break in, and until recently, they were the only AI provider that was allowed and cleared to work in the classified space. So this gives the Defense Department a wider range of vendors to choose from if in the end they really do part ways, as they have threatened with Anthropic in this dispute over terms. The idea is that you would see these companies use their products more in both intelligence platforms and in combat operations platforms like the Maven system that has been used in operations against Iran.
That Anthropic context is important because many are feeling that perhaps they're just broadening the circle of AI expertise they can lean on. NVIDIA, for example, talk to us about how this new agreement expands the use cases for the Pentagon.
Well, in a way, the Pentagon is also thinking about some edge deployment of AI. And what that would mean is that if they wanted to move a data center to a remote location somewhat closer to the battlefield, well, that would mean that they are not connected to a cloud per se and running a very small data center. And I'm speaking of this in more hypothetical terms, but if you wanted to bring some of NVIDIA's processors remotely and away from a cloud and away from the safety of, say, a large data center in Northern Virginia or at a large military base in the Middle East or elsewhere, this would be a way to do it. And of course, if the Pentagon wants to expand the data centers it runs and provides on its own property, and we have reporting on that from earlier in the year that they intend to do so at a facility in Georgia, this would give them more leeway to do so on a classified basis as well. So for NVIDIA, this is an expansion of their interest in government work. We saw it at the GTC here, Ed, when you were here in October. There was a lot of talk about what more NVIDIA could do for the government, and certainly the Pentagon has been one of the biggest buyers of tech services and really a driver historically of advances in technology over the years.
Bloomberg's Mike Shepard. Fascinating, as always. Thanks for bringing us it from Washington. Now coming up, Twilio absolutely soars after reporting strong first quarter results. CEO Khozema Shipchandler is going to be here with us next. This is Bloomberg Tech.
Twilio shares taking off after strong first quarter results. The company reported its fastest revenue growth in over 3 years, fueled by a massive surge in AI-driven demand. Joining us to discuss what he describes as, quote, a milestone quarter, Twilio CEO Khozema Shipchandler. The stock's on track for its best day right now since the end October, but at one point since May of 2020. This doesn't happen every day. So in that milestone quarter, what were the milestones that you think your company's hit that's got the market thinking like this?
Yeah, thanks for having me on. I'd point to a handful of things. First off, I would say this was one of the best quarters in the company's history. And, you know, we've been in the process of a turnaround for a handful of years, and I think this marks a really important inflection point in terms of, you know, the history that's unfolded over those couple of years. I think in particular in the quarter, something that was really exciting for us was that our voice channel grew up to 20%. That's the 6th consecutive quarter of accelerated growth in a row for us in that channel. And you can see a lot of that sort of been catalyzed by voice AI workloads that you see from so many different kinds of startups. And I think what's exciting about that is that these conversations are being enriched by data, which also kind of speaks to our strengths. And in particular, these conversations are moving from things that used to be human to human, increasingly human to agent, agent to human.
For lots of people, the kind of base level story is messaging demand, right? Going back to Twilio's roots. The more exciting story is that Twilio's on this journey where it goes from being that messaging and communications offering to being much more of an infrastructure layer. You know, you hold yourself to really high standards, Khozema. I know that. We've discussed that. But where do you think you are on the journey towards that kind of much more encompassing platform that you wanted Twilio to be?
Yeah, I mean, I would say that we're executing well on it. We've got our big customer conference Signal next week, so I don't want to get too far ahead of that and front run it. But the way that I would characterize it is very similar to the way that you described it. Like these things tend to start in a channel like messaging, like voice. Our ambition is that many more of these translate into cross-channel communications in which there's this channel orchestration layer, which means basically that however a customer wants to be reached, whenever they want to be reached, whatever the kind of context with which they want to be reached, they are. And that allows for a highly enriched, deeply personalized interaction, whether, again, that's human to human or agent to human. And I think at a time when the LLMs are unleashing so much power, being able to add context to those conversations is crucial. And that's something that Twilio is really able to do.
Khozema, you're so B2B, but how much are you starting to see your B2C, like the whole world of vibe coding? I'm having to set up Twilios to be able to connect my WhatsApps with what I'm writing, to be able to basically see the way in which I use AI personally. Is everyone suddenly using Twilio in a more consumer-focused way?
I think predominantly we're like 99% B2B, to be honest. I mean, I think for the lay developer, maybe that's kind of the angle of your question, I think it's never been easier to use our console than it is today. We've actually done a ton of behind-the-scenes work to make that console experience super simple. So we've always been a very, very attractive brand for developers. I think increasingly, whether you're a vibe coder, whether you're just experimenting, whether, frankly, you're launching an agent for the first time and asking your agent to do the work on your behalf, our console's ready for that. We're seeing pretty limited volume, I would say, so far, but we definitely think that that's going to take off, and we're super excited about it.
This is clearly a very positive story for the stock. We're up 4 billion in terms of market cap today alone. What does it mean for people at the moment, Khozema? Are you hiring in this moment?
Yeah, I would say we are doing like some modest hiring. Like by and large, over the last couple of years, our workforce has been relatively flat. I think like a lot of companies, we're seeing tremendous productivity gains as a result of AI. I'll speak for myself, but I think this is true of our workforce. I'm 10 to 15% more productive today than I was 2 years ago as a result of using different kinds of AI tools. We deploy a variety of them with very, very strict security guardrails to our workforce. But I think everybody is seeing a real improvement. Yeah. Rather than turn that into like a layoff or something of that nature, instead, we're turning it back to how can we accelerate innovation velocity.
Twilio CEO Khozema Shipchandler on the back of big moves on a big earnings report. We appreciate it. Now coming up, Roblox's aggressive push for safety features. It's costing them nearly $1 billion. We're going to discuss that and the outlook with the CEO, Dave Baszucki. This is Bloomberg Tech. Welcome back to Bloomberg Tech, and let's get back to Apple's earnings and break down one of the highlights. Today's big number, $20.5 billion. That's how much Apple made in the China market. Well, look, Apple has struggled in recent years, beating Wall Street projections, though this time, and then some. They thought it was just going to be $18.9 billion. And we are seeing a significant move in the stock, at one point hitting a new record high. We're up 4.6%. And this really is just showing that Apple is back to firing on all cylinders. What was amazing, though, was they were really clear about the supply chain headaches, about the cost pressures. But for now, investors not worrying about the margin hit.
Let's talk about the change topping Apple investors' minds. What to expect from incoming CEO John Ternus. Bloomberg's Mark Gurman joins us for more. Mark led our coverage of the earnings print last night. And in the end, right, it becomes a pretty simple story where they give an outlook for the June quarter, and we know that there is a supply constraint, particularly on Mac. But the moment that John Ternus popped up on the call, could I just ask you, Mark, now that you've had a night to sleep on it, what the takeaway from that was of what Mr. Ternus had to say?
Well, he certainly didn't keep me up all night thinking about it. He didn't really say much. He praised the guy who handpicked him as his successor. He said the right thing for the audience on the call, which was we're going to continue with the financial discipline that we've had the last, 2 decades under Tim Cook. But the real comments related to Ternus actually didn't come from Ternus himself. They came at the very end of the prepared remarks from CFO Kevin Perek, where he said, we're having a CEO transition, and we're reevaluating what we do with our cash. And this practice we've had about share buybacks, giving money back to the shareholders, we've given back over $1 trillion. Well, we're going to continue that We're doing another $100 billion buyback that we're announcing today. But the fact that we're talking about it means something is going to change. And what they're doing is they're giving themselves more flexibility now to give less money back to shareholders and hold on to the cash for things like deals, for investments, for infrastructure, for R&D. And that is a really big deal. And this puts John Ternus, in terms of what they're going to be doing with their cash, somewhere in the middle between Steve Jobs and Tim Cook. Tim Cook was all the way on one side, giving as much back as possible, right, trying to get to net cash neutral. Steve Jobs was on the other end of the spectrum, where he didn't want to give anything back to the shareholders because he wanted to hold on to as much as possible for investment. And by the way, he lived through the early years of the company and Apple nearly going into bankruptcy. But Ternus is somewhere in the middle, whereas they're not going to keep it all to themselves. They're still going to give money back, but they want to be more judicious with that money as needed.
Some analysts have perhaps read into holding on to cash, not promising as many big buybacks perhaps, or hinting at that under the new leadership as being also, we've got some price pain to swallow. We're going to have to take a hit to gross margins if we are going to see the pricing pressure from memory, for example, Mark. Is there that anxiety? Should there be that anxiety?
That might be a small component of it, but I would be surprised if Apple's response to pricing changes related to memory ends up being taking money out of their own bank account and eating those margins. I think they're going to offset some of that by raising prices. Typically, in these types of scenarios, Apple likes to do a split, right? They like to eat some of it and like to give some of it to the consumer. So it may be some of that. But we'll see. I don't think that's going to be entirely clear until the tail end of the year or early next year.
Mark Gurman, all over the Apple news. Thank you very much indeed. Now, on another earnings front, Roblox is paying a price for children's safety. The stock plummeted after the company cut its full-year bookings forecast, making clear, though, that new age verification and child safety features that they've embedded, they're creating some friction for user growth. CEO Dave Baszucki joins us now. And you made really bold statements in the investor letter saying this is worth it. This is worth it long term because it's building a safer global standard of safety. Talk us through when you will see actually that friction die down.
Hey, great to be here and highlighting coming off a great quarter, 43% year-on-year bookings growth, bookings of $1.7 billion. More than twice what we've shared with investors as our long-term growth trajectory. And yes, we've highlighted our commitment to setting the global standard for healthy, safe, age-appropriate digital engagement. We have rolled out Age Check all around the world this quarter. We now have over 65% of US users who we have age checked. But we did highlight in our earnings call there is some short-term friction from communication and other factors. We believe, though, this is worth it. We are well on our path to 10% or more of the global gaming market and more of that of US. And we want to bring along all of our under 16 users as well as the over 16 who are growing very rapidly.
How about bringing along the industry, Dave? Because you're a first adopter here of this technology that can help age verify. Do you think others in gaming will have to do this? Do you think others will experience such friction as you come out of it?
I want to highlight, if you go to our corporate site and read our values, one is take the long view, and the other is respect the community. We've continuously innovated on safety since we started in the company, and as the technology got good enough to age check, we've leaned into it. This is in addition, of course, to our industry-leading text filtering, the fact that we don't allow image sharing on the platform. This has allowed us to do several things. In addition to age checking, we're going to be introducing kids accounts and select accounts. We're able to do this within our same app because we are age checking. Also, because we're age checking, we can now identify the 18 and up players on our platform, and we've introduced some interesting economics for them. So we do think we're setting the industry standard, and we have this commitment to what we call the global standard.
Dave, good morning. You came on the program 3 weeks ago, and I asked you if you would kindly model for us at that moment when you were announcing the new policy and new platform changes with safety in mind, how that would impact user behavior And that's kind of played out in the earnings print, right? Just explain that, the interaction between the policy that you put in place and why it would impact user metrics and behaviors on the platform.
Well, I want to highlight we're using age check and we're asking our users to age check if they want to use the communication functionality on Roblox. So in Australia, we're over 70% age checked, in the US over 65%. But that does highlight there could be roughly 35% of our users in the US who currently are not communicating on our platform. We believe that can contribute to some short-term friction. In addition, as we go long on our 18 and over segment, we've shared that more and more we're using our recommendation algorithms to support long-term retention on the platform more than shorter-term monetization. These both have contributed to short-term friction.
Dave, let's talk about Roblox's future and Roblox Reality. This seems like a big play, a big upgrade from Roblox Studio. We talk all the time to Unity. I am very into Unreal Engine, right? And how that impacts my experience in the games that I play. This presents an opportunity for you to do work with some of the big budget developers. Could you just explain the pathway to that?
Well, I want to highlight two separate levels of this. We have continued to release over the last quarter and will continue functionality that is very unique to Roblox. Roblox is a game engine, a client, a cloud, and together we're committed to publishing once and having whatever you publish work both super high quality on a gaming PC, but also perform very well on a 2 GB Android phone. Those are very different configurations. We want to support both with the same build, as well as when our creators build on Roblox, they go around the world. The future for us is a hybrid architecture, and what we want to do is make it easy for creators to create experiences that are ultimately multiplayer and photorealistic, and do it very easily by powering it with AI. So we have combined really a hybrid architecture. We're starting to show it off that combines our multiplayer synchronization with cutting edge real-time video world models. We believe this is the ultimate hybrid architecture to democratize photorealistic multiplayer.
I like that about the democratization and making sort of the building of games open to many. But how do you think about the pricing structure, briefly, Dave?
We've said initially Roblox Reality will not be free. I mean, real-time video AI modeling in the cloud is expensive, but just like with the rest of the AI world, these prices are going to come down and down. I want to highlight this is complemented really with our vision for creation. And if we look at what's happening in the coding space over the last 6 months, more and more software engineers are literally having AI run overnight, doing multiple iterations to help build software. Gaming is much more complex. It involves software, 3D assets, NPCs, real-time operations, terrain, geometry. We're really pursuing that same vision, that agentic multiple iteration AI work with Roblox Studio. We've started introducing things as innovative as using NPCs to help test software. And we believe we're uniquely poised to help creators build more quickly, higher quality, and more diverse experiences.
Dave Baszucki, CEO of Roblox, thank you very much. Now, coming up on the program, sources tell Bloomberg Peter Thiel's Founders Fund has raised $6 billion to back later stage companies, less than a year after its last growth stage haul. We'll have the details next. This is Bloomberg Tech. Peter Thiel's Founders Fund has raised $6 billion of fresh capital to back growth stage startups. That's according to sources. The new fund comes less than a year after it closed its last late-stage vehicle. Bloomberg's venture reporter Natasha Mascarenhas broke the story and is with us. I think this is Founders Fund's biggest ever haul. So it's not just that it came in quick succession from the last fund being done. They're going big, and so is everyone else at the moment.
Totally. I mean, I made a joke on X earlier this year that firms were going to have to raise new funds just because of how much they're putting into OpenAI and Anthropic.
Right.
And now we're seeing exactly that. I mean, their last growth fund, they closed last year around $4.6 billion. They invested that in less than a year, and now they're back in the market. The last growth fund was only invested in 7 companies. We saw its first ever investment in Anthropic, a $1.25 billion check, big investment in OpenAI as well, and then across their other late-stage investments like Cognition and Stripe.
Natasha, who's wanting to recommit here? Is it LPs and new monies coming in to Founders Fund?
Yeah, no, I mean, it's $4.5 billion from their institutional LPs. So we're talking sovereign wealth funds from across the world, institutions, and then $1.5 billion from Founders Fund employees as well, including Peter Thiel. And this is something that people really do focus on because it is unique to Founders Fund. A lot of times when venture capitalists raise fund, you might see just the general partners, the top senior management put in some capital. But this is the largest amount that actually the employees of Founders Fund have put in to the fund itself, too.
Putting the money where their mouth is. Bloomberg's Natasha Mascarenhas. We thank you so much. Just all of these scoops when it comes to VC. Now let's talk more about generative AI right now, because it's turned coding from a specialized skill into something anyone can do with a simple prompt. But as AI writes more code, its impact is being felt on hiring for junior software engineers. Just take a look.
I actually tried a whole bunch of tools in the beginning, and this was about a year ago, which I think is feels kind of like the Stone Ages of vibe coding. I was able to make the foundations of the app in maybe a month. And as a totally non-technical person, I was actually able to build a full stack app. So there's front end and back end capabilities, and I was able to get it out on the App Store just entirely myself.
And whilst that's opened up new possibilities, there is a downside. Since 2022, employment for software engineers right out of college has fallen by nearly 20%. Nagel thinks companies are making a big mistake.
I think that one of the biggest risks of the whole thing is that people are going to get too focused on the short term and not think about the long term enough. First of all, if you don't hire any new people, who's going to run the company in 10 to 15 years? But second of all, our research and others has shown that these junior people are actually the ones who are able to change their job and get the most out of using these tools.
Chen agrees.
I feel very strongly that this is not replacing engineers. I think the more you use AI to build, the more you understand the space and kind of even know what you can and can't do. It's technically I can make it, but an engineer probably could have made this in a much shorter timeline and probably with much more robust code.
Watch the full Wall Street Week episode later today, 6 p.m. Eastern, 3 p.m. Pacific time. Okay, coming up, we're going to get back to Apple and the week that was in tech earnings. What a week it was. Apple back up towards session highs, up 5%. This is Bloomberg Tech. NASA Administrator Jared Isaacman says a future space economy cannot be completely taxpayer-driven and cannot be forced into existence. But NASA can work to set off the spark. He laid out his vision on Bloomberg Surveillance this morning.
A space economy sure would be great, because I don't think we're going to have that sci-fi future we imagine with lots of space stations and orbital outposts into Mars base if it's entirely paid for by the taxpayers. So I want data centers in space to work. Why not take advantage of a giant fusion reactor that's already out there? I want, I want us 3D printing organs. I want us making cancer-curing drugs in microgravity. I want all that to come to fruition. We can't force it into existence at NASA, but we can do all we can to ignite it.
A lot to discuss, but let's get back to our main story of the day. It's Apple. Shares, as you can see, at 5%. They're basically at a record high. Gene Munster, managing partner at Deepwater Asset Management, joins us. And Gene, before this, you were worried that perhaps stock's not getting enough credit. Are we getting enough credit yet?
We're inching there, up 5. I would have guessed, based on these results, we'd probably be up closer to 10%. And Caroline, I think what's at the core of this is a concern that we're kind of at the peak here, that this is the super cycle over the past 3 quarters, just to put this into perspective, about this disconnect, which I believe between what's going on at Apple, what the stock is doing versus the fundamentals. I think there's this piece, an important piece around the concern that we are at the peak, As I mentioned, over the past 3 quarters, iPhone's grown at 20%. The previous 3 years to that, it was up 1.5%. So you see that super cycle. Of course, investors are always looking forward. For next year, the iPhone growth is now expected to be 6%. So you see that big drop down. And that's what investors are wrestling with. If they truly believed what we saw in the March quarter, in the June guidance, that there was any form of sustainability to that, this stock would be up more than 10%. So I think this idea of understanding what's beyond the super cycle is at the substance of understanding what's in front of the stock.
But what about beyond the June quarter? And Tim Cook, who's handing over the reins after the June quarter, saying, look, we believe memory costs will drive an increasing impact on our business. Is that also what's holding back the stock?
Well, I think, the memory piece, they're showing that they're doing an incredible job of navigating that. So the guidance that they gave did anticipate some depression in margins, very small amount, 30 basis points effectively. The street had been expecting about 120 basis points compression because of these component environments. So yes, they are seeing an effect, and that could be part of kind of what's going on here. But I think in aggregate, investors are probably feeling better today about how they're managing this environment than they did a couple days ago. And so there's also this dynamic, kind of a unique dynamic. Again, I think this is about understanding growth for next year. But in fairness to the conversation today, there's a dynamic around returning capital to investors. And they added some new language about putting the business priorities first. Now, they, of course, always do that. But the fact that they had added that language to their conversation about capital return really sparked some questions on the call, like, are they thinking about doing some sort of upsizing in terms of their investment pace, which is very much behind, of course, not just on the CapEx, but on everyday R&D compared to the other tech companies. And so that was another small dynamic. But again, I think this comes back to a very basic question is, what's the true growth rate of Apple?
Gene, I love following you on the socials because in real time, you're just giving your honest thought. I think you're in the camp of people that made a big deal of John Ternus being on the call. And though he didn't say much, you got some vision out of it, right? You see the direction of travel for Apple under Ternus?
Yeah, you can. I think, like you said, he didn't say a ton, and you have to put everything that they say in the context of what they've always said in the past and kind of decode it. In the case of what Ternus said, he did lead with talking about them having financial discipline, continuing that, which basically means that they're not going to go and start to spend a ton of money unexpectedly. So I think this idea that they're going to join some sort of hyperscaler CapEx race, that's just simply off the table. The other piece, he jokingly said, I'm not going to talk about new products, but if we think about what we're doing, this is the most excited I've been because of what is going on at this time. Now, the most exciting that I've ever been, they say that's standard operating language. But at this time is referencing, of course, the AI chapter. And I think that he knows what's at stake here, and they've got a lot to do to change investors and consumers alike in terms of their competence.
Classic Apple maximalist language. Gene Munster, Managing Partner at Deepwater Asset Management, thank you very much. Breaking news on the Bloomberg terminal. President Trump says he will increase tariffs on EU autos to 25%. See shares of Stellantis dropping pretty quickly. This is in a Truth Social post where he says it is understood that if those companies were to build cars in the United States, there would be no tariff. So, of course, this is impacting cars built in the EU, shipped into the United States. It's a developing story, Kara.
It is, and just think how well many of the analysts say Apple has navigated such tariffs, for example. We tied up a story on Apple on So Much More. That does it for this edition of Bloomberg Tech.
Check out the pod. It's worth it. It will give you everything you need to know. This is Bloomberg Tech.